Today, I'll walk you through a powerful trading strategy that uses the T3 moving average. You might be wondering, what exactly is a T3 moving average? The T3 is an enhanced version of the traditional moving average. It was created by Tim Tilson and is designed to be smoother, faster, and more responsive compared to standard moving averages, while reducing lag. In this tutorial, I'll show you step-by-step how to apply this T3-based trading strategy that delivers highly accurate results. Make sure to follow along until the end. Let's dive right in. Before we begin, if you find this kind of educational content helpful, please consider liking this video and subscribing to my channel. It really supports the growth of the community and motivates me to share more valuable strategies like this. Setting up the indicators. For this strategy, we'll start by adding two T3 moving averages to the chart. Go to your Indicators tab and search for T3 MA ribbon. Select the one created by Just Uncle L. Once added, you'll see two T3 moving averages automatically applied to your chart. Next, we'll adjust their settings to align with the parameters for our strategy. Open the settings of the T3 MA ribbon. Set the fast length to 11. Set the slow length to 34. Make sure the indicator is based on Heikin-Ashi candles for its calculations. Now go to the Style tab, scroll down, and increase the opacity of the ribbon. This makes it easier to see price movements against the indicator. That's it for the first setup. Adding the RSI indicator. Now, we'll add another key indicator, the Relative Strength Index, RSI. Search for RSI in the indicators list and click to add it. Next, we'll modify its settings. Under the Inputs tab, change the RSI length to 2. Under the Style tab, set the upper band to 80 and the lower band to 20. Finally, disable or remove the RSI moving average line, since it's not needed for this setup. Now everything is properly configured on your chart. Understanding the trading concept. Let's go over how to find precise buy and sell signals using this setup. You'll notice two moving averages. Both are T3 moving averages. The line with a length of 11 reacts faster to price movement. The line with a length of 34 moves more slowly, representing the broader market trend. When the shorter T3, length 11, crosses above the longer T3, length 34, and holds that position, the ribbon area turns green, signaling an uptrend. When the shorter T3 crosses below the longer one, the ribbon becomes red, indicating a downtrend. Our plan is simple. When the ribbon is green, we look for buy, long opportunities. When it's red, we look for sell, short trades. We'll use a combination of price action and RSI signals to confirm our entries. Long position setup, buy signal. Let's first look at how to identify a long setup. As mentioned earlier, when the ribbon is green, the market is trending upward. We'll look for a pullback to join the move after a temporary correction. To confirm a valid pullback, we want to see two things happen simultaneously. The price should move completely inside the green ribbon. The RSI line should drop below 20 for at least one candle, while the price is inside the ribbon. Remember, we set our RSI with a length of 2, making it highly sensitive to short-term movements. This setup helps detect extreme oversold conditions even within a strong uptrend. When this happens, it suggests that the pullback may be ending and the price could soon resume upward movement. Next, we wait for a candle to close above the ribbon. That closing candle serves as the confirmation candle for a buy entry. At that point, you can enter a long trade with your stop loss placed just below the recent pullback low. Target set at 1.5 times your risk to maintain a solid risk-to-reward ratio. You'll often notice that after entering such trades, price moves efficiently in the direction of the trend. As the trend continues, you may spot multiple setups, where price dips into the ribbon, RSI falls below 20 again, and a new candle closes above the ribbon. Each of these indicates potential entry points as long as the ribbon remains green. However, if at any point the price closes below the ribbon, you should stop taking long setups because that could signal the beginning of a trend reversal. Short position setup, sell signal. When the ribbon turns red, the market bias shifts to bearish, meaning we look for short selling opportunities. Here's how to identify them. Wait for the price to pull back into the red ribbon. While the price is inside, check if the RSI line rises above 80 for at least one candle. This indicates an overbought condition during a downtrend, a prime signal for potential downward reversal. Next, wait for a candle to close below the ribbon. Once that happens, the sell signal is confirmed. You can then open a short position with your stop loss placed just above the recent pullback high. Profit target again set at 1.5 times your risk. This consistent risk-to-reward structure allows the strategy to remain profitable over time, even when a few trades don't work out. As the downtrend continues, similar opportunities will appear when price briefly moves back into the ribbon and RSI crosses above 80, offering repeated entry signals. Avoiding false signals. Even though this strategy is highly accurate, it's important to remember that no system is perfect. You may sometimes get false signals, especially when the trend is losing strength, entering a transition phase, or moving sideways in a range-bound market. For instance, you might get a final signal just before a major reversal, much like what happens near the end of a trend or within consolidation zones. That's why risk management plays a vital role. Even an excellent strategy can fail without proper control of position sizing and risk exposure. Risk management and best practices. A reliable approach professionals use is the 1% rule, meaning you risk no more than 1% of your trading capital on any single trade. This ensures that even if you face a series of losing trades, your account remains protected and you can recover over time. Consistency and discipline matter much more than any single winning trade. Maintaining good emotional control and following your strategy parameters exactly as defined here will give you the best results over time. If you want to go deeper into this topic, TradeSnipe has a complete video guide on risk management and position sizing, linked in the description. It's highly recommended to watch that next. Understanding risk control is essential if you want to become a consistent and profitable trader in the long run. Final notes. And that's the full breakdown of the T3 moving average trading strategy. If you apply these principles correctly, waiting for pullbacks, confirming entries with RSI, and managing your risk, you'll have a structured and disciplined framework for trend trading. Thank you for watching and following along. If you have any questions, drop them in the comments section. I read each one and will respond to help clarify where needed. And don't forget to subscribe to TradeSnipe and turn on the notification bell so you don't miss future tutorials on advanced trading topics and strategies. I'll see you in the next video. Trade smart and stay disciplined.